Good morning, investors and corporates. Welcome to SET Digital Roadshow for first quarter of 2023's performance review. This session will last 45 minutes, including the Q&A session. The company will start with a 30-minute presentation. During the Q&A session in the last 15 minutes, investor may use the meeting room chat box or raise your hand function. We will open the microphone so you can ask the questions directly. May I now invite NR Instant Produce Public Company Limited to start the presentation.
Sorry, one more time. Good morning, good afternoon, good evening to everybody who has joined. Just allow me to go to screen share mode. Okay, so if you're not seeing this full screen, then please do let me know. Welcome to the Q1 performance. There's going to be a slight update to the slides, just slightly in regards to recent events. And so if you want a revised version, we will send that. We've spent a lot of time as they're working on the screen. I'll just continue to talk. Actually, we're working on some really exciting stuff. One thing, as we grow, we're actually building up our team, and we have a new person who's joined on board named Nicholas, who's head of international business. He was CEO of some listed companies in Singapore, and he was 10 years with Ernst & Young, graduated from Cambridge. In summary, in Q1, what you're going to see is a slight change in our gross profit margin, and that's just because of the change in our product mix as we adjust towards a higher portion of our revenue coming from pet food, as well as also what you're going to see is as we go through the year, a larger and actually a jump in revenue. So you're going to see a change in gross profit margin as we grow. We ended the quarter with good liquidity. Our net debt to equity still remains low. I want to point out we're just about to pay down 700 million in debentures, and so that will drop even further. I think the key highlights of this past quarter was pet food is now starting to deliver against plan. We're closing our anticipated acquisitions of our Asian grocery stores that will drive significant synergy and margin. And there's some excitement around what we're doing in plant-based. So maybe skipping through the summary, let's just a quick recap on our business model. So we plan, ultimately, this is our business model, is to be a vertically integrated, climate-conscious food manufacturer. And our goal is to be the first net zero food company of this nature in the world. The primary components would be farms and farmers, manufacturing and brands, and then distribution to the end consumer. With distribution over the next, I would say 24 months, being a huge focus in omni-channel Asian grocery. So this is what I was mentioning before. So these are our three pillars of growth. Specialty foods driven by our existing factories, pet food, our direct-to-consumer, which is Amazon plus our Asian omni-grocer platform. This actually will result in increased revenue from our manufacturing facilities, and you're going to see exactly how this is going to work. And I'm really excited about what's happening in plant-based. It's good for us, but not good for other people. So without further ado, let me just go quickly into our first strategy, which is ethnic foods. I think the world is starting to normalize. We were just at ThaiFex. We gained a lot of customers, as I'm sure a lot of our competitors have. And we'll probably see a nice sales bump starting off with ThaiFex. We got 10 to 15 containers of new orders, as well as interest from new markets. And there was a lot of interest in our sauce products as well. Our new sauce factory in Samut Sakhon, which is next to our old factory, is almost halfway complete. And this will allow us to have a more automated, higher volume sauce facility with better margins. I'll talk more about this in a moment in terms of our retail distribution in the UK. But the supermarkets that we acquired now are expecting to deliver around 6 million baht in additional accretive revenue on top of what we're already selling, specifically through these supermarkets. I think overall the outlook for ethnic foods globally is Q1 we saw basically a bottoming out in terms of the industry. We see a recovery in Q2, but this is also in combination with our own conservative policy. You know, we were super conservative last year in Q4, and then that kind of like flowed into Q1 as we really didn't give credit to customers just to see what would happen. We were really tight with credit. We were really focused on profitability. And so that resulted in lower growth. But as of April, actually, now we've extended credit to basically new customers. And so and some of our old customers. So as we see stabilization in the industry and our confidence in the whole sector. In terms of pet food, I know a lot of people have reached out and asked us, why is it that we're expecting large growth as some of these larger pet food companies here in Thailand are not? Thailand's pet food export primarily go to the United States. As many of you know, in the United States, there's been a very severe overstocking issue across all retail channels, especially due to the container freight crisis. We are not affected by this because we do not export to the United States or Europe. Our primary export markets are, you see the next stage, within Asia, which does not experience the overstocking issue. Some other industry information is this, Thailand continues to be a low labor cost base with unique raw materials that cannot be found in other countries, hence why we're one of the biggest producers of pet food in the world. There were raw material prices did increase, but more in global commodities, for example, soybean meal. But we're seeing that peak in Q1 and then subsiding and falling now as of Q2, which should improve margins overall. And in terms of the actual business update, we've started exporting now to Australia, India, Saudi Arabia, Malaysia, Philippines. Our factory is up and operational. In fact, our first production line that was up and operational in December is actually at full production capacity, basically 100% as of June. It's like 90% as of May. So we've already invested into a second production line now that will increase capacity from 1,800 tons to 4,000 tons per month. That comes online end of year. As well as we've also invested into a wet pet food production line to support demand from customers. We were really successful with our own branded products, with OEM coming online as of May and June of Q2. But in Q1, basically own brand really drove revenue. In our second category, direct to consumer, it's largely driven by two parts. So Amazon and omnichannel Asian grocery. I would say in Amazon, we own 3 supplement brands. We're seeing the entire Amazon supplement industry rationalizing. There are some smaller players that are going out of the market, and it's consolidating around current industry players. And what we've seen very pleasantly is profit from our Amazon business on a monthly basis, and so I think we're going to be very excited to report earnings as we go towards the end of the year. And what that's also going to mean is that our share of Amazon's administration costs, right, is actually going to drop significantly. And so we actually expect our Amazon business to deliver very good net profit going into the end of the year. I'm not going to go over some of the specifics of the industry. I'll just go into the highlights. For Asian omni-channel, our focus is the United Kingdom. In the Asian product market in the United Kingdom is worth 2.8 billion pounds per year. And what we're seeing overall is consumers are shifting to private label and discounter chains. And this is actually in line with our strategy, which is to acquire cash and carry stores and B2B businesses in the United Kingdom. I think what would also be of note, McKinsey and several other research houses released recent research. Europeans, as well as people in the UK, are looking how to save more money. Interestingly enough, they view eating Asian food as a way to save money. For example, noodles, rice, something more filling. So they're not going for steak anymore. They're trying to basically buy things that are that they can basically still fill themselves while still tasty. On e-commerce, I just want to point out we've seen stable revenue with net profit on a month-by-month basis, and we're going to see a reduction in Amazon fees in the second half of the year. Our focus is basically focusing on organic revenue here, strengthening our core product offering, and basically selling into Thailand. We just recently got FDA approval for our vitamin gummy product. So hopefully in the second half of the year, we're going to introduce that into Thailand. We're about 7 months behind schedule due to FDA issues that we had here in Thailand, unfortunately. In terms of inorganic M&A strategy, we have a lot of deals. I mean, these are actual deals that we've looked at, that we've actually rejected. The primary reason why we haven't done any M&A since last year, the summer of last year, is two reasons. Number one, we had a more prudent strategy. So we would only acquire if it was an exceptionally attractive deal. That means valuations. And unfortunately, despite the very strong EBITDA coming from some of these deals, the valuations are still north of 5 to 6 times EBITDA upfront. And we're kind of like targeting 3 to 4 times. So I think the industry is still kind of like out of whack in terms of expectations. We're probably going to see maybe valuation expectations drop towards the end of the year. Some of you who are seasoned investors might ask me, wow, buying to 5 to 6 times EBITDA, that's great. But across the brands that we've already acquired, we are acquiring on a front end 3 times EBITDA. And then with the earnout, eventually going to 4.5 times to 5 times. So we feel that those valuations are going to drop. I want to now spend a bit more time in terms of our omni-channel Asian grocery. We've now acquired 2 deals. For those of you familiar with London, we have acquired one in Greenwich, which is the eastern side of central London, and the second in the middle of London in Chinatown. Each of these companies generate around 800 million baht in revenue on an annualized basis. They have around 3 to 5% net profit margins. I'm going to show you in a moment, but we expect that we will be able to help them increase their overall net margins. The total deal size for both is less than 250 million baht. What I want to highlight is this. The accretive impacts of the revenue on our factory is around 5 to 10%. So in other words, for every 100 pounds or 100 baht in revenue that these supermarkets generate, we expect to generate at the very minimum 5 to 10 million baht in additional revenue directly from our factories. And the reason is we actually make a lot of what's actually on shelf already. In addition, these companies have significant B2B wholesale businesses, which is why we're expecting now around 6 million baht in additional revenue synergies starting in starting in June, but especially into Q3 on a B2B basis as they help us expand our product markets. So this is an example of actually a supermarket we acquired, and I want to show you exactly what we're going to provide. On the fresh side, I mentioned that we're doing farms, right? We're working with farmer communities. As you can see here, these supermarkets in Europe, not just in the UK, are buying fresh, air cargoed into the UK on a weekly basis. And they're doing so very inefficiently. And we can actually do this better with a 20% margin, and that's what actually we're doing. And introducing more exciting in-season products that are something that has not been seen in the UK. I don't want to give up more than this. But I want to point out some of the margins. Red shallots go for about a little over 700 baht per kilo, okay, in this supermarket. This is our supermarket that we already put money in, okay? The farm gate prices is 50 baht. Supermarket prices in Bangkok is around 130 baht. Here in the basically seasoning sector, we will introduce our Lee brand products. Our Lee brand products here basically sell very well. We generate a little more than $10 million in the United States alone, specifically on Lee branded products in supermarkets. And we expect that this is going to be a really good seller because the UK, from a taste perspective, is very similar to the United States. In addition, we also produce noodles. This is something that we're going to introduce as well. And then we also produce curry paste, and this is something we're going to produce as well as sauce. I want to point out these key categories to exactly show you the opportunity for us to make private label products for these supermarkets, introduce our own branded product, while also having our competitor products sit alongside. As well. So we're not trying to remove our competitor product, but we're going to introduce our product. And we're very confident with good product positioning in in-store media and product tasting that we're going to drive very good volume of our products into these supermarkets. So I wanted you to be able to visually see what we make and how it's going to be introduced into these supermarkets. And I want to note, across these two supermarkets, we also gain almost 15 cash vans as well, which are basically salespeople who go around London selling product. I want to now move quickly to basically our third group strategy, which is climate action. This time around, I really want to focus on plant-based. A lot of research has been done as to what's going on with plant-based. A lot of people says, hey, plant-based is flatline. But as you can see here, plant-based is still growing on a CAGR basis. It's basically captured a wide audience in the United States, and this also reflects the UK as well. Interestingly enough, shelf-stable plant-based products are growing significantly versus refrigerated, and we expect this to grow. So frozen and shelf-stable is going to take over from refrigerated, which basically applies to what we make, which is we make shelf-stable and we make frozen. And very interestingly enough, one of the biggest categories of growth is basically both spicy and cultural cuisines. And in fact, one of the most sought after plant-based products is pad thai, Thai food. And so this is where we think that we're going to have a very good advantage filling this gap moving forward. I also want to point out this. The sector looks like it's flatlining, right? You might hear news of startups going bust. And I'm going to tell you why. More than $5 billion was invested into the sector up until this year. $5 billion, okay? The entire sector now is consolidating. As you know, technology valuations have flatlined, and venture capital funding has actually dried up. And what this means is this, right? There's a drop in valuations. There's no VC funding coming in, or very limited, which means all the startups today are no longer growing at all costs. There's actually a profit motive now, which means is that there's no stupid loss-making activities going on. Number two, there's now opportunities to acquire companies which, with revenue, that have invested tens of millions of dollars into branding for almost nothing. And I'm about to show you the deals that we've acquired so far. In fact, we have now almost a dozen companies that have raised more than $300 million that have all failed to mismanagement or misappropriation of funds due to easy venture capital money. And our strategy is to acquire these almost for a dime, consolidate the manufacturing under one roof in Thailand to boost margins. And we actually have 5 in-depth negotiations, but I want to introduce you to basically how that's going to happen. So our old strategy was basically having regional production. So a factory in Europe, a factory in Thailand for Asia, a factory in Thailand for America. That no longer plays out anymore because of the Ukraine war. Inflation is basically eating away at margins and resulting in instability in terms of supply chain. Our new strategy is to have the primary factory in Thailand, which is our joint venture with PDT Group, as the center of universe, and having very small footprint factories in Europe to supply certain customers. So that allows us to basically shift production as supply chain is interrupted due to externality events. From a branding perspective, there's going to be a lot of M&A opportunities, and I'm going to show you this in the next slide. And there's going to be a greater focus in terms of taking our product and distributing it into retail. So specifically in our own retail branches, as well as our Asian supermarkets. If I go back to the research, right? A lot of the demand now is coming from cultural, even Thai products, right? 1/3 of plant-based products, consumers are Asian, and there's almost zero Asian plant-based food offering. And so we feel that this nicely aligns with our UK supermarket offering. This we've already paid money for. The deal is done, is the Very Good Butcher. I actually followed this because this is the second IPO after Beyond Meat. The IPO jumped 800% on the first day, peak valuation 200 million, on a high of around $15 million in revenue. They had a great brand, great product offering. I really, really like their product. As you can see here, they had cool stores. When they opened the first vegan butcher chain, queues were around the corner. Their packaging was cool. I mean, it was just like, it was just a really cool cafe concept that was plant-based. They have more than 100,000 followers. They invested more than, I think, almost $100 million into the business. But unfortunately, they went bankrupt 3 months ago. So we were able to acquire the company. That transaction actually happened last week. And our plan now is we got all the formulations, the brand, the social media accounts. We're now going to centralize all that production into Thailand and some of that in the UK as well for distribution back into North America. It's going to take some time to get the product back on shelf, but I'm super excited. I have another brand that we're about to close end of the month called No Evil Foods. They raised $15 million, had $5 million revenue. That also did actually, this one costed us money. The No Evil doesn't cost us any money at all. We just share some equity in a new SPV. I have another 3 more under term sheet negotiation, same deal. So in terms of our plant-based factory in Thailand, we're looking at certification August plus or minus one month. Capacity is 3,000 tons per year, producing all the products that you actually saw the Very Good Butcher needs. In terms of our plant-based retail expansion, I've got 6 minutes left, so I'm going to have to be quick here. I think there might be some delays just due to location availability. This might actually be shifted towards the end of the year. I want to quickly just end before we go into financials with this. Right now, we have our pilot net zero solutions in the field now. So basically, these are biochar kilns that we put into the field. I don't have a lot of time to explain this. And then we have a larger containerized plant that's going to be installed in December. What this essentially allows us to do is it converts our product to net zero. For those of you who doesn't know this, basically, for example, if I'm making, say, a bottle of chili, and this bottle of chili emits 20 kilos of carbon, this platform is going to allow us to take that net off that 20 kilos of carbon emissions, and we will have truly the first net zero product in the world. Super excited. I know a lot of people don't care about this, but it's going to matter, trust me, in 2025 and 2030 when all the supermarkets only want to stock net zero products. Anyways, conversation for another day. Key takeaways: ethnic foods recovering in Q2 back to historical norms. New sauce facility almost done. Pet food is coming out, delivering against our plan. 100% capacity fulfillment in June, 90% as of May. Direct to consumer into profitability and very good profitability as our Amazon fees reduced end of the year. Opportunistic M&A for e-commerce. Let's see if valuations fall. Super excited about the 2 supermarkets that we acquired. I actually have 3 more under negotiations, from small, medium to actually very large, like $60 to $70 million large. So let's see how that goes. Plant-based, it's tragic for the startups, but great opportunity for us. And we're going to net zero. I'm hoping we commit to our net zero targets internally of 2026. With that, I'd like to quickly go to financials. And I only left 4 minutes for Kunpen before Q&A, but here you go.
Okay, thank you, Peter. Okay, come here for the operating result. The sales at the 508 million baht for this quarter is decreased from the year-on-year for the last quarter and then last year also. Because of the economic slowdown in the United States and then Europe, and then the high level of the stock, from the customer side, that one is make our sales is decline.
Yeah, this also, as I mentioned, we actually, all new customers, we actually require cash payment versus typically 30 days credit. This actually resulted in a loss in sales, but we felt we would rather see how the world would go before we started providing credit, and we started providing credit in April.
Okay, next slide going to be revenue structure by the segment and geographical. Okay, for the USA sales and then Europe sales, they are the same level. It's 34%, and then for the Thailand, it's 21%. Okay, the most is Oceania and the rest small one. And then comes for the segment, ethnic food is 52% of our total sale, and e-commerce is 20%. Pet food is 18%. It's increasing significantly.
And I think maybe if I could just speak to this slide. This is what we mean by there's going to be a shift in gross profit margin, not a shift in terms of and that's just because pet food and retail just have lower gross profit margin versus e-commerce. But overall, as I mentioned, right, the omnichannel Asian grocery concept allows us to bypass middlemen and sell directly to consumers, as well as directly to wholesale B2B clients, as well as directly to supermarkets. And so that'll actually see an increase in margins on our manufactured products at our ethnic food facilities.
Okay, SG&A this quarter is lower than last year and then last quarter due to the lower sales and then lower the commission, especially for the selling price. Okay. And then therefore the EBITDA is 108 is higher than the last year, but lower than the last quarter.
And I think this reflects our prudent policy of just making sure that the world is indeed normalizing. I think we made the right choice. I think a lot of companies just growth for growth's sake, and I felt just being prudent was the best way. I think we made the right choice. But having said that, I'm very happy where progress is going in Q2 and especially in the second half.
Okay, the net profit, 28 million is higher than the last year, but it's lower than the last quarter for the same reason above. Financial ratio, please, Kudan.
Yeah, I think overall, I just want to highlight some key things, right? Inventory holding period slightly increased, and the reason is because of pet food. Right now in pet food, we have to stock a lot of raw commodities, for example, like soybean meal, rice bran, and corn. Actually, as we buy silos, this also might slightly increase as well, but because we don't have the ability to silo product yet. But it shouldn't differ too much from this period. You saw collection periods actually slightly improve, and that's just because we've just been more prudent, actively pursuing customers and for payment, ensuring that we're collecting on time. I think overall returns, still slightly growing on equity versus asset. I think from a leverage perspective, you're going to definitely see a significant drop into Q2 once we pay off our debentures, as well as a significant drop in net debt to EBITDA and net debt to equity. I think this is still a lot below a lot of other companies, and then it's going to dramatically drop probably, not probably, but actually in the next 30 days.
Okay, so I guess this session has come to an end. Thank you very much for joining us today. Should you need any further information, please do not hesitate to email us.
Thank you. Thank you, everybody.
Thank you.